Asia look like in 2030? How will geopolitics, supply chain, artificial intelligence change the landscape? We know the region accounts for 1/3 of the global economy, 2/3 of its population. We know it will be a consumption hub, production hub, innovation hub. But what does this mean for business? What does this mean for markets?
Hello everyone. Today we are diving into one of the biggest economic questions. Is Asia actually winning? Right now the global economy is wrestling with massive uncertainty. You hear about trade friction, rising interest rates, and higher tariffs, especially out of the US. Logically, the world's factory, Asia, should be the region suffering the most. But here's a massive contradiction. Asia is still the fastest growing region in the world. The question isn't if Asia is growing, the question is how is it pulling this off despite the geopolitical chaos? And what does the official data tell us about its future? Let's dive in to find out if Asia is truly winning and exactly where to find the proof. Today we are looking at the hard data, the official projections, and the real story of how Asia is about to reshape the global economy. Let's start with the contradiction. The ADB, Asian Development Bank. The ADB tells a slightly different story. In their Asian Development Outlook April 2025, they projected developing Asia will grow at 4.9% in 2025 and 4.7% in 2026. But here's the catch, and this is crucial. This forecast were finalized before the massive tariff announcements on April 2, 2025. Let's come to our first source, which is the gold standard of global finance, the International Monetary Fund, the IMF. The data shows that Asia isn't just growing, it's shouldering the responsibility for the entire planet's growth. The IMF's Regional Outlook for Asia and Pacific, October 2025, clearly stated that the region is projected to contribute about 60% of global growth in 2025. So is that a definite answer? Is Asia the main driver? But this growth is not easy. The IMF notes the headwinds, specifically mentioning sharply higher US tariffs and increased trade policy uncertainty. The World Bank, in its East Asia and Pacific Economic Update October 2025, estimated that even as growth slows, the regional growth remains well above average. For example, East Asia and Pacific growth projected at 4.8% in 2025, though China's growth is forecast to ease. The report stated that the rest of the region beyond China will still see robust rates, supporting a diversified growth base. So Asia is the main driver. But this growth is not easy. The IMF noted the headwinds, specifically mentioning sharply higher US tariffs and increased trade policy uncertainty. So what about the tariff nightmare? How bad are the tariffs really? The IMF notes the higher US tariffs could reduce demand for Asian exports, weakening their export-led growth model. Let's talk numbers. As of 2025, the US has imposed tariffs averaging 74% on Chinese goods when you add up everything. China has retaliated with tariffs reaching 125% on American goods. Economist Intelligence Unit projected that these tariffs could knock 0.5 to 2.5 percentage points of China's GDP growth from 2025 to 2027, depending on the severity and China's response. Here's where things get interesting. Anyone gains. Some countries may rise, others may lag, because Asia is diverse. All economies will ride the upswing equally. Weak institutional capacity, social inequality, debt burdens, or governance issues could hold back some countries even if others surge. South Asia is actually thriving and is said to be the fastest growing sub-region in Asia. According to ADB, Asian Development Outlook, April 2025, South Asia's growth is expected to rise from 5.8% in 2024 to 6% in 2025 and 6.2% in 2026. India specifically was projected to grow at 6.7% in fiscal year 2025 and 6.8% in fiscal year 2026. What's the Asia's resilience factors? Why Asia keeps going despite the chaos. Despite all these challenges, Asia is showing remarkable resilience. Let me explain why. Numbers are one thing, but long term rise depends on underlying structural forces. Here are the biggest growth engines based on what the reports and analysis highlight. Regional integration. The Regional Comprehensive Economic Partnership (RCEP) has been a game changer. According to Bao Forum for Asia report March 2025, trade within the RCEP region rose about 3% from 2024, with most member economies achieving year-on-year growth. Which led to China Plus strategy. Tariffs imposed by the US are designed to slow exports from certain countries, particularly China, but this didn't stop Asian trade, it just rerouted it. The IMF report explains that trade friction has contributed to a rise in intra-regional trade, meaning Asians are trading more with other Asian countries. China's share of exports to the US continues to fall, but its share to Asian partners has increased, largely reflecting the flow of intermediate goods to ASEAN nations for further processing. Less dependence on a single economy. With growth coming from many countries, slowdowns in a big economy becomes less damaging to Asia as a whole. The World Bank's regional breakdown shows that even if large economies slow, smaller and mid-sized economies can compensate. This diversification also helps avoid all eggs in one basket, making long-term regional rise more likely. In simple terms, Asia is becoming less reliant on Western demand and more reliant on itself. Power of domestic consumption. The second shield against global uncertainty is the strength of growing Asian consumer. The Asian Development Bank (ADB) in its outlook December 2025 pointed out that a stronger outlook for countries like India is driven primarily by robust domestic consumption supported by tax cuts. And billions of people are moving into middle class. Their internal spending power creates an economic buffer that external tariffs simply cannot touch. Many Asian countries still have large working populations and rising middle classes, which supports consumption, services, urbanization, and long term domestic growth. Asian economies have shifted focus from export dependence to building strong domestic consumption. This makes them less vulnerable to external shocks like tariffs. The tech and innovation leap. Finally, Asia is winning by not just accepting but leading the next wave of technology. It's shifting from being a low cost manufacturer to a high value innovator. A McKinsey and Company analysis on technology trends October 2025 highlights that Asian advanced economies like South Korea, Japan, and Taiwan are benefiting immensely from AI-related global investment boom. There's demand for advanced semiconductors, which power AI is pouring money into Asia's most sophisticated economies, ensuring their continued relevance and growth. The World Bank's update also mentions that digital platforms, AI adoption, and new technologies could reshape job markets and export profiles, offering a structural boost beyond traditional manufacturing. And the October 2025 update, which was a glimmer of hope. Here's some breaking news. The IMF's October 2025 Regional Economic Outlook shows Asia proving more resilient than expected. Growth projected at 4.5% in 2025, unchanged from last year, then moderating to 4.1% in 2026. This was better than April forecast. So now let's wrap this up. Is Asia winning? The answer depends on how you define winning. If winning means maintaining growth while the rest of the world slows down, yes, Asia is winning. If winning means completely immune to tariffs and trade wars, no, Asia is definitely feeling the pain. If winning means adapting and finding new paths forward, absolutely yes. The key insight from all this official data is that Asia is remarkably resilient despite facing the highest tariffs in modern history, a trade war between the world's two largest economies, global economic uncertainty, China's property crisis,
In the October 2025 South Asia Development Update, we expect growth in South Asia in the short term to slow from 6.6% this year to 5.8% next year. That still leaves South Asia the fastest growing emerging market and developing economy region. Over the medium term, the adoption of artificial intelligence, AI, could generate a substantial productivity boost, especially for the 15% of workers who are in jobs that are highly exposed to AI and where AI is complementary to human skills. Already, AI skills command a 30% wage premium in South Asian labor markets. Any AI-related growth dividend could be amplified by trade reforms, especially efforts to lower the cost of intermediate inputs. In South Asia, tariffs on intermediate inputs are currently more than double of those in other emerging markets and developing economies and weigh on competitiveness. A carefully sequenced tariff reduction, ideally embedded in a broader free trade agreement and trade facilitation measures, could catalyze private investment and job creation, especially in trade-related activities. And these are the activities that disproportionately employ younger and higher skilled workers, especially in manufacturing. Both artificial intelligence adoption and trade reform are likely to cause a reallocation of workers. Governments can make that easier by getting the foundations right with human and physical capital, by creating business-friendly environments to stimulate firm growth, and by mobilizing private capital.
Asia is still projected to contribute 60% of global growth and maintains GDP growth rates that developed nations can only dream of. The real story isn't whether Asia is winning or losing, it's that Asia is transforming. The region is shifting from export dependence to domestic consumption, building regional trade networks that bypass the West, investing in technology and services, diversifying supply chains. This isn't about victory or defeat, it's about adaptation and evolution. It is the engine of global growth, is observing trade friction by redirecting investments in supply chains within its own borders, the China Plus One and intra-regional trade phenomena, and it's securing its long-term future by leading the charge in high-value AI and digital innovation. However, it's not a victory without cost. The IMF warns that the trade friction combined with local issues like slow productivity growth and aging populations in places like China and Japan means the overall pace of growth is still slowing compared to a decade ago. It depends heavily on policy choices, adaptation, and how global dynamics evolve. It's a complex but a challenging win. But for the next 5 years, the data is clear. Asia remains the most dynamic and resilient economic story on the planet. Thanks for sticking with me through all this. What do you think? Is Asia winning despite the traffic? Are we heading toward a completely new global economic order? Drop your thoughts in the comments. See you in the next one.